you're a busy professional, on the go, interested in current market affairs, business, finance, or leadership, this is the channel for you. Subscribe below and click on the bell icon for weekly updates. So my name's Kay Chouhan. I'm here with my co-host Mike Elwood. Today our special guest is Bob Holt, who I've personally known for a while. Those of you not aware of Bob, he is a self-made millionaire. He founded a business called Mears, a facilities management business, which he floated onto the London Stock Exchange. Not only that, he's a serial investor who has invested in over 100 businesses, some successful more than others. We'll be talking with Bob around some of his business investments, the risk and opportunities he sees. So, Bob, with that said, would you just like to say a few words about how you've got to where you are?
Well, good day, everybody, and thanks for tuning in. My story is quite simple, really. Grew up in the north of England, trained as an accountant, and failed as an accountant, really, didn't qualify. What I quickly found out, however, was that I could get to the answers on most things before other people. So I joined the cleaning sector in 1980-81 as a finance director of a small business in part of a public company up in Manchester. And it was managed or driven by two very bright and very successful people. And what they did was they professionalised the sector, which at that time was wholly unprofessional. You either learn from these people or you don't. Anyway, within a couple of years, I think 3 years, I got headhunted by Michael Ashcroft, now Lord Ashcroft. And, Michael has been hugely successful, obviously now a billionaire, Tory party chairman. And Michael, we used to work, I'm not sure he doesn't do it now, at breakneck speed. And, I learned so much in a short period with him, 18 months with him. And I think we did 50 odd acquisitions, and I ran a finance department, etc., and, built the business. I then got headhunted in a very curious set of circumstances by one of his friends. And one of his friends was Tony Berry, then the darling of the stock market, just about to become. At that time, he was broadly unknown. And Tony saw something in me that I'd never seen in myself. He asked me to go to the States and build his business in the US. And coming from the north of England I moved from Oldham to Manhattan, quite a different challenge. Anyway, cut a long story short, I spent a couple of years in the US and got lucky, bought some good businesses, operated the business whilst I was there, then came back. By that time, the group, Tony's group, was going at breakneck speed and had become the darling of the stock market. He ended up being the villain of the stock market, as often happens. And I came back, managed one of the businesses for him, one of the divisions. The crash came, didn't it? So the crash came in the late 90s. Anybody associated with growing businesses by acquisition was out of favour, so I lost my job along with a few other people. And I then went to run a high-profile public company called Tottenham Hotspur PLC. So, I was only in my early 30s, so you aspire to run a public company, but it's fair to say I probably didn't aspire to run that public company. Anyway, from there, as with most people who do this, what I've done for other people, you aspire to go and do it for yourself. And, if you limp through then the early 90s, I joined my old colleagues where I'd been in cleaning at Mighty. I was one of the early moves in Mighty. I made some money. The first time I made some real money. And I then bought control of Mears. I bought control of Mears, small private business, 9 million revenues, in a whole host of different facility management services, and quickly got out of some of them because it was obvious that doing railway maintenance in a small way, you're a hostage to fortune, really. You really were never going to get very far. You're always at the behest of a bigger player as a subcontractor. So I got very, very lucky then. I focused on what we were doing, and there was no market leadership in social housing into the public sector. And very quickly it became evident after about a year. After 6 months, I floated the business. So I bought it privately for 50 grand, floated it. 3i were trying to buy it off me for a couple of hundred grand about 3 months later, I seem to remember. And the market value of that business when I sold my shares was 550 million. So I think I probably did wise to turn down 3i. Anyway, I brought in a professional management team. We floated it. We got it to float away. Within the share price we floated at 10p. Over the next 2 and a bit years, the share price went to 13p. 30% growth. I'm feeling quite comfortable at 30% growth, and that's quite good. And I was in those days. I was very good at making things boring. And for boring meant, let's do the work, let's invoice the client, and then let's make sure they pay us. And in those days in the public sector, the last bit wasn't usually something that people concentrated on, I getting paid. I insisted on it. And I insisted on it in a management way, which was to say that if we've done the work and you've invoiced for the work and the terms and conditions are 30-day payment, if you're not getting paid, then you must have the wrong relationship with that client. So if you haven't got the right relationship to go and get us paid for money that's owed, I don't need you. I'll go and do it myself. I can assure you I'll get paid. And that theory of that draconian approach to cash collection was one of the early secrets of Mears, because up until about, I don't know, 200 million revenue, we were debt free. Because I wasn't allowing a local authority or any client to sit there holding on to cash that we were owed. Now, you could say that on one hand is naive. Well, there is a naivety about that approach. Of course, there was always flexibility to it. But in reality, it's nothing wrong with the principle. And we did that and got on. And, I hit the market right. We professionalised that market. Of that, there's no doubt. The market that we created is probably 359 degrees different than it was when we entered it. We extended the time of contracts. We increased the opportunity. And that sector now is dominated. Mears now, it was 9 million revenues then. It's 1.2 billion revenues now. As I stepped off the board 18 months ago. And at first, when I got approached with aggressive activist shareholders saying we're going to get rid of you, I wasn't too. I really fought them, and in the end, I thought, well, why do I want this hassle in my life anyway? I've made more money than most people could ever dream about. Well, if these idiots think they can do better, let them get on with it. I stepped off the board in January 19. Share price £3.39. I'd sold my stake at £5.50, by the way. Today, that share price is £1.20. It's about a third of what it was when I left. That doesn't mean to say anything. It means to say the world is a different place. The strategy, in quotes, hasn't worked. It doesn't mean to say it would have worked under me, but what I'm saying is the world's a different place. So, that's my story. Subsequently, I chair 2 other listed companies. And in SureServe, I'm particularly proud of what turnaround I've done there. I went in there 4 years ago. It had debt of just short of 50 million for RBS. And today RBS owe me money. So I'm particularly proud of what we've done there. And I think that's, for me, almost a bigger success than what we did in Mears. So that's my story.
Given all your experience and you've lived through previous recessions, how do you compare this one to the previous ones?
This is very odd, isn't it? Because it wasn't a financial recession, stating the obvious. It will become a financial recession, obviously. See, Michael says that we're officially in a recession. Well, I don't see that recession. Actually, I'm more concerned now than I have been at any time in the last 6 months, because for the last 6 months, working from home, furlough, and my 2 businesses, my 2 listed companies, which are both debt-free, by the way, and they're both very profitable, by the way, and are both local authority and NHS facing, they've done incredibly well. And why have they done incredibly well? Because they weren't debt burdened, and we have enjoyed some key worker status. But more importantly, they've got committed workforces who know how to go out and manage disparate workforces. And in FM, a larger element of being successful in FM is knowing how to manage and motivate disparate workforce. I think that I'm more concerned now as we come out of furlough, as we come out of an encouragement from government to work back in the office, as we come out of any government aid, and we've still got an ongoing, and that the last bit is the crucial bit, and we've still got an ongoing question mark about COVID, and is it localised or is it national? So I'm a little more concerned than I have been for 6 months.
I think there's no doubt, Bob, that the government's intervention kind of just held off some of the decisions that people were taking around redundancies and reshaping their business. And as we come off that kind of support, I guess you're going to see the economy reshape a little bit. And I share your concern. I worry about hospitality and what it's going to mean for certain elements of hospitality. I worry about some of the inner cities if we do have a change in people working. But it's no different, I guess. You remember when the mines were closed and everyone thought it would be the end of the world. And, you imagine trying to get people to go back and do those jobs now when we're just going to go through a bit of a shift in focus and a shift in what's done. And it's about adapting to that, I guess. So the best hospitality businesses will adapt. They'll find a way to kind of give people what they want. But I think it's going to be painful for 12 or 18 months until we go through that.
Yeah, and Michael, we've avoided the word Brexit.
Yes.
And, in the nicest way. I personally was against. I was a Remainer, and I was a Remainer because I'm in my 60s and know a comfortable life. So why change it? I was dead against it then for the first 12 or 18 months because everywhere I looked in the hospitality sector or at the bottom end or on the minimum wage was somebody who came from, not from the UK. So I'm thinking, how the hell are these jobs going to be done? Now, it may well be, perversely, that there are fewer jobs to be done. So, i.e. in hospitality. So, for not having European people coming and having the flexibility to be here may actually help partly solve some of this downturn in the economy. It may well do. But the problem is, just as you touched on, I don't get a lot of sense from a lot of people who want to do those jobs. We don't seem to have created this environment where people do want to go. And that's why I have anybody who knows me knows that if I meet a first-class cleaner, bus conductor, waiter, janitor, whatever it is, then not only do I congratulate them, but I usually tip them. Well done. It's good to see you care and good to see you're good at what you do. Because those skills are not a lot different than having to apply skills on other different things. So, I'm slightly concerned about where we go to. Not in my business, because I spoke to one of the chief execs this morning. And it's a function of, you mentioned about people who are putting off redundancies. I think it's even more than that, isn't it? It's people now realising that they needed 17 people to do this particular job, rota, shift, or whatever it was. They managed it during lockdown on 14 people. Not sure we really do need 17. We might need 15. So let's make that decision to take off too. And I think that's the more reality. Even successful business making money like us, there's an element of that. Of course there is. And we've done things like that. We've said, look, we only got a small head office anyway. Does anybody come? Well, the odd person. Do we need 2 part-time receptionists? No. And again, it's not trying to be clever or obtuse or anything, but it's just reality of, come on, let's get where we need to be. And there'll be a lot of that, I suspect.
I'm a board advisor for a hospitality business, and we've had the chance there that you never get in normal commercial life to put your foot on the ball almost and kind of close down and really have a look. And then it's a conscious effort, the overhead that you put back into the business. Yeah. And you're right, the decisions you make then are, well, do we really need that role? Do we need to bring that person back? So I see a bit of pain over the next number of months as furlough comes off and people are trying to re-establish their businesses. There will be some unemployment, and it's kind of creating the opportunities across different sectors in slightly different roles.
Yeah, and Michael, I think without wishing to promote the channel that we're on at the moment, I think people in decision-making roles, chief executives, senior managers, will be so lonely, are going to be so lonely over the next 6 months. And so that people need access to these sort of things where they can just get some ideas bounced off, access to individuals. Just, what do you think? You've got grey hairs, have you done this before? It's funny, Michael, you talked about the miners' strike. Somebody asked me the other day about something like this. And I said, well, I remember more accurate, I remember the postal strike. Now, people don't remember the postal strike in 1971 or 2, where there's no post. And I was an office boy, so, go and collect this check, go and deliver this. I mean, you can't. And then, of course, the 3-day week, and all these wonderful things that, as you're growing up, and I wonder how history will talk about this period. As you look back in 10, 20, 30 years' time, how will history, hopefully, we'll be well through this situation. How will history look at it?
No doubt we'll adapt. I'm fascinated to see just how we do adapt and what the changes are. But I think, it's going to accelerate. Everyone talks about accelerating the digital piece, and I think it will do that because it will make things more efficient, and people will look at how to do. And what does it do to inner cities? We've been talking about how you use some of the empty retail space, and actually, could that be a positive thing to regenerate some of the inner cities? So there's lots of different topics, I think, that are going to follow this.
Yeah.
So I just want to touch on a point that you mentioned earlier, Bob, which was you said this isn't a financial crisis, it was more of a health crisis. I just want to be slightly controversial on that. We know that recession happens every decade. The debt deficit is the highest it's ever been. So do you feel if COVID didn't happen, do you think we wouldn't had a recession? Is that what you're saying?
Yeah, I think that is right. Yeah. What I actually said was it didn't start off as a financial recession.
Yeah, okay.
In my world, it started off as a health issue. I mean, I did daily webinars to one of my businesses, and I can't remember at what week it was, but at week 5, 6, or 7, whatever it was, I said this is now changing from health to an economic decision-making process. So it was very consciously things changed for economic reasons rather than health reasons. And of course, we're now going backwards, aren't we? So they've got the dilemma. Boris has got desperate to get people back into work, back into offices, back into a workspace, and whilst at the same time having significant lockdowns. And on the lockdowns, which are, I'm defending on my webinars to my teams, these are local. Don't talk to me about, the national. Scotland is a real problem because it's in one of my businesses, it's a big part of my business. And the First Minister was very early going into lockdown and incredibly late coming out of it. And is now going into part lockdown, Aberdeen, now East Dunbartonshire, and it's not quite mixed messages, but very dangerous because, of course, what it's doing, especially at the time the school's open, it's creating panic. So people are now saying, "Oh well, I can't come in because little Jimmy went to school and his friend has it, so that means we've got it and we can't come in." Get tested is the answer. Get tested. Get tested. Yeah. So anyway, I think in answer to your question, clearly, economically, this has been a major disaster for the country. I suspect I'll end up paying a few more taxes at various levels, me and a few others. I suspect we will see some form of austerity measures, hopefully not in the public sector, because, as I said, mentioned that most of mine are non-discretionary spends in those sectors, so not too much harm for me. But undoubtedly there'll have to be some tightening of strings. Although I'm no academic, I would love to be in the Treasury really at the moment. I really would, because if you look at sitting down and adding up big numbers, you look at corporation tax, VAT receipts, where are we? There's talk about income tax, corporation tax going from 19 to somewhere up to 24%. What impact is that really? What is the impact of stamp duty? What is that? And it must be fascinating trying to run that. And anyway, so we are where we are, aren't we? We are in a very different situation. There's a few of us doing a bit better than others, but let's look out for our common man.
Obviously, you are a founder owner as opposed to a operator. Do you think there's a huge difference between the founder-led CEOs or chairmen versus the operator CEOs?
Well, it's your money. It's always different because you think differently, don't you? Whether people like to admit it or not, and you'll get people saying, "Well, I treat it as though it's my own money." Well, take a cut then. Don't take any money. Stop your dividend policy. Look, I'm not trying to tell anybody else how to run their business. All I'm saying is it is different. Of course, it's different.
Have you personally taken any cuts?
Yeah, we did.
Yeah.
We took a cut. We took 25%. I was most insistent that the guys who ran the businesses didn't have to do that, because what generally was the case, they were working harder than they've ever worked.
Yeah.
Because they were managing a smaller workforce and doing, in some cases, more work. So I was most insistent, look guys, if you've got a strong social conscience, it's up to you, but please, I prefer you not to take a cut. And, some of our guys have really, one of our senior guys making a lot of money a year in terms of his business, worked every day for like 90 days, every day, 7 days a week. throughout this. And, that's not healthy. And if somebody was sat there like me saying, well, by the way, mate, I'll have 25% off you.
Yeah.
No, it's wrong. And some people did. Some people said, look, some of the businesses which weren't doing as well as others said, look, we prefer to take 25% cut. Well, you can do it, but you don't feel you're forced to by me. Not at all. It's up to you. You don't have to manage your own business. Get on with it.
In terms of some of the risk and opportunity, me and Mike have had this conversation where we've spoken about how productivity has been quite stagnant. And I think this has given an opportunity for businesses to reevaluate. What other risks do you see at the moment with some of the businesses that you're operating or in general in the marketplace? And if we can also talk about some of the opportunities and some of the conversations you're having.
Well, let's talk opportunities first, because that's the positiveness. There are fantastic opportunities out there because, there will be failing businesses across every sector, and blue-collar service traditionally will have a higher level of failures than others, because you have people who come into it with respect pretty unskilled. It's an easy entree. There's not necessarily barriers to entry on some of the businesses. Someone will overtrade, and so the moment a tap is turned off, they'll fail. So tremendous opportunities. But for people like me who have been consolidators in facility management, as you call it, support services, I would prefer to, there are tremendous opportunities. What I did the first week of COVID, and I'm talking the 21st of March, I sat down with the guy who heads up our bid teams and said, have we got enough resource to do our bidding at the moment? Well, just about. So, well, if this carries on at any length of time, we're market leader in one of these sectors, big sector. So we're going to get more opportunities to bid. I want the bid teams increased. So I've increased my bid teams by 7 people during lockdown. And guess what? The bidding opportunities are significant because, people have been sat on their hands about putting bids out for the first 3 months there, and now accelerated that process. Even some local authority people who are not yet back in the office, they've got to go and get things let before April 1 start for next year. So we're seeing increasing amounts of bid. So we're certainly looking at that as a massive opportunity. Other than that, clearly I'm turning the light upon any things I want to look at buying, because there will be things out there which are failing. Private equity is in a situation now where all it wants to look at are bargains. So, it doesn't want to look at proper, sensible transactions, if you like, to take private. So, we're all bidding on the same stuff. I'm seeing massive opportunities. The risks come from buying the wrong things, don't they? I never cease to be amazed that when people say to me, I bought this business, not performing very well. First question, how many businesses have you bought? Oh, this is the first one. Are you surprised you make a mistake? I bought hundreds, and I still make mistakes. So come on, mate. Don't be shocked. All the stats coming out of people who are buying things is they're buying them on longer earnouts with retaining management. So economically, that sounds right to me. It sounds sensible. So why be any different? If it's too cheap, there's something wrong with it anyway, isn't it? Usually.
Are there certain sectors you're not looking at because you see them as declining?
I'm not a real estate man, so I wouldn't be looking at real estate. The only real estate I look at is council houses. And I maintain more of them and have done for 40 years than anybody else has done ever in the UK. So if I'm maintaining them, I'm gas testing them, I'm repair and maintaining them, I'm cladding them, I'm doing whatever to them, and I'm doing them in partnership with local authorities. So those are big things for me. I've got a lift maintenance business, again, predominantly public sector. I've got an electrical business, predominantly public sector. I've got an energy business where we are advisors to the Scottish and Welsh governments. We are their partner on that, so we're very successful on that. So a whole range. I'm not looking at cleaning. I'm not looking at engineering services really.
How would you be looking to fund those businesses? Financing, or I know that you guys are sitting on cash, or would you look at preserving that cash?
Would you do what I do? Personally, I'm debt averse. I always have been. I genuinely am debt averse. But you can't build a company of, we're at 250 million, but you can't build a business 400 or 500 million without leveraging your balance sheet. And even if you did, you'd get criticised for doing it. So there is an element where you always have to get some form of leverage, but it's sensible leverage. It's building relationships with bankers is always a great place to be, because, yes, I mean, they've had a horrible time, haven't they? The banks have had a horrible last 10 years. So they're very, very cautious, and of course, the cost of doing that. However, having a track record is quite useful. So if I wanted to go and borrow a few quid to go and do something, I probably would be successful in doing that. But I'd have to think carefully about leveraging this business back up again when I've only fairly recently rescued it from going skint. So I wouldn't be frightened of going and borrowing a few quid, 10, 20, 30 million quid from the banks. I wouldn't be frightened of doing that. But it would have to be on something that I personally felt incredibly successful at. And what does that mean? I'd probably put some bit of money in it myself as well, just to prove to people that I'll back this myself. And when you do that in a public company, certainly, shareholders and bankers think, well, okay, if he's going to put his own thingy on the block, then we'll have a look at it.
And it's sort of allied to what you said before as well, Bob, which is, look at the opportunity that you're funding on debt as well. And if you're paying a high price in a market that's already near the peak and you're taking a lot of leverage on, then there's probably only a downturn coming for you. If it's at this period of time, you got, and there's kind of upside and it's sensibly structured, then that probably makes sense to help grow.
Absolutely. Debt isn't for everybody, is it? And people, again, they don't know how to manage it. It does annoy me, and our sector is notoriously bad for it. When you have a big personality like me and you come to the public markets like I did, there's all these clever Oxbridge people who are looking over their glasses at you and thinking, not too sure this guy knows. And they'd always used to quote, oh, well, such a body are doing this. They've grown at 15%, you've only grown at 10%. And I always used to say, what do they do? Oh, they're one of your competitors. Well, what do they do? No, they fit kitchens and bathrooms and other things. I said, do they? I said, because we make people smile. That's what we do. We actually satisfy our clients' needs. Yes, we do happen to do all those other things, but get a life, mate. Can't you read the balance sheet? How much cash do they generate? Because cash is king. So, again, I'm not trying to sound, the problem with being successful is you assume you know what you're doing and you assume that's the right way to do it. And clearly there is always a right way to turn and a left way to turn. But I'll continue to, I think, follow the path that I have, which is relatively debt-free. Manage it tightly, keep your costs under control, and make sure that everybody knows that if there's any problems, you'll be at the front of the trenches with them.
Have you bought anything recently? What predictions are you making?
We're very happily holding our cash. We're very happy with that. Yes, we are looking at things, and we're looking at things forever. You've got to. You can't stop looking, because you never know what's going to be out there, and opportunities do happen. And you've got to be, you've got to be in the game. And we'll fund them. Depends what we're looking at. I think fundamentally we'd probably fund them from our own resources initially.
What are some of the risks? I mean, we spoke about some of the opportunities. Do things like the margins within the sector that you work within worry you because of the cost associated to actually running those businesses?
No, because when you operate in a low margin business, this sounds crass. You don't worry about making 5%. You worry about your 95% of costs. So you worry about controlling your costs. And if you control your costs right, you bid them right, you control your costs right, you manage and motivate your team right, then funnily enough, your 4 or 5% quite often turns into 5.5%. But, I continue to get people saying to me, oh, we're not interested in your sector because the margins are too low. So, all right, what's that then? I mean, I always remember, back in the day, a major business in our sector. And at that time, they were capped at probably 2 billion. We were capped at about 70 million probably. And he said to me, well, we're not interested in your in you, Bob, because your margins are so low. So, well, funnily enough, at 3%, I'm making more than you. Your margins are lower than mine. Yeah, but your margins are shit. Fine, I'll carry on. And we found that every time we deep dived accounting-wise into our balance sheet and work in progress, our margins just hiked up a bit. When we hammered the operators, look, guys, you've got 200 grand worth of work in progress here. I'm not going to carry it on. if you want it in the benefit of your accounts and your bonus count, you better get it invoiced. But funny enough, there was always a bit of margin coming out of it. For us, we've always controlled costs quite well. I've always employed terrific amount of accountants in my businesses, because why not? You know, they allow you to sleep well at night, and that's vitally important when you're building, growing businesses.
In terms of where next and what you're looking at, are you looking at anything international, or are you focused predominantly on the UK?
I'm UK centric, really. I operate in massive markets in the UK. Mears are in a market where half their business, about 700 million of their business, is in a 5 to 6 billion market. There are other markets where they've got 200 and 300 millions are in the 50 of the 500 million. So there's massive amounts of market here, and we're quite good at what we do in my businesses. I try and focus on what I'm good at and not what I'm not good at. I could go and chase businesses in near Europe, which there would be some logic to, but I think at this stage I'll just carry on building UK centric. Now again, running a public company, I've been criticised for that. Well, Bob, you're all sterling centric. You can't win. You've got too much liquidity. You've not enough debt. You've got too much debt. You know, your margins are poor. Get on with it. But people will like it. You know, Mears grew 30% compound over 10 years. That share price that started at 10p went to £5.50. Those things don't happen. You don't have a 55 bagger. It just doesn't happen. We did. We created that. Why? Because we had a good management team who hit a market right and managed to grow it significantly. And you know, there were certain unique dynamics of that business where you had longevity of contracts, which allowed me at the top of the organisation, and I was chairman and chief exec at the time, to be literally 18 months ahead in my thinking. Because without being clever, I knew what my revenues were going to be broadly, you know, to within 10 or 20 million quid on like 400 and 500 million, because I had fixed contracts. So at that point, once you're sort of that year ahead, you think, well, hang on, what if I am growing at 30% again next year? If I go up to 500 million for 400 million, bloody hell, have I got enough people in IT? Have I got enough people in health and safety? Go and get me another health and safety guy. And because I had these growth in earnings, I could fund it as we went through. So we had created a unique set of circumstances which allowed us to do that. So I think for me, I'll stick to the UK, and the key, of course, is bring people through, isn't it? You know, you don't always want just me at the top of it. So at the end of the day, we'll try and find somebody who is able of taking this on to the next stage. Somebody with that same.
Presumably, Bob, he was able to pay dividends along the way as well.
Oh yeah, it was funny, Michael, because in about year 10 or 11, I can't remember which, somebody said to me, "Have you sussed out about the divvy this year, Bob?" "No, what do you mean?" "You're paying a divvy, which was our listing price. So we paid a 10p divvy in something like year 11 or something, and we listened at 10p. You think, bloody hell.
Yeah,
wow. I thought about it. Wow, yeah, wow, exactly. Yeah,
well, that's and the pension industry needs that, doesn't it? So
indeed it does. Yeah, indeed it does. Yeah,
it's been great to hear Bob today. Some great thoughts from him, some advice from a very successful career. So appreciate it. Many thanks, Bob.
Okay, Mike. Okay, Kay. Good to see you.
Bob, I always enjoy our conversations, and you're always generous with your time. Is anybody out there looking to connect with Bob? Bob, what's the best way to get in contact with yourself?
I have a very easy email, which is bob.holt@bobholt.com.
Excellent.
Yeah, I like that one.
We're on LinkedIn as well, so I'm sure Bob wouldn't mind connecting with some of you if you are interested in understanding the markets a little bit more, or maybe getting some advice from somebody who's been around and understands the market. With that said, thank you so much, and I look forward to seeing some of you back on our next recording. And don't forget, if you've enjoyed this interview, please do subscribe, and I'll see you next week with our next video. Thank you. Bye-bye.